Welcome back. My name is Scott Heaton. I am your host of Scott Recommends, and we are back with Matt Bell of My Tax Pro. So today, he wants to chat about as self-employed folks who either have an LLC or an S corp. How is that earned income taxed?
Yeah, absolutely. So when you're self-employed, um, you end up paying a lot of taxes, it seems like. And I want to talk about, I want to talk about the difference of, a sole proprietor, an LLC, an S corporation, and how you can potentially save money on taxes simply by the way that you're structured as a business. So when you're self-employed, you're paying federal tax like everyone else does. You're paying state tax, assuming that you live in Utah. And then you're also paying what's called FICA tax. FICA tax is roughly 15%. And so to give you just a quick hypothetical, let's say you bring in $100,000 with your business. And let's say you have about $20,000 worth of expenses. Your net profit is $80,000. And you're going to pay federal tax, state tax, and FICA tax on that $80,000. Now, let's say you decide to become an S corporation. As an S corporation, you can say, okay, IRS, yes, I made this $80,000. However, I'm going to pay myself a wage of $30,000. The other $50,000 is going to be called an owner's draw or an owner's dividend. And the reason why you separate that out like that is because the owner's draw or dividend is not subject to the 15% of FICA tax. So now all of a sudden you have this wage of $30,000, an owner's draw of $50,000, but as a reminder, the $50,000 not subject to FICA tax. And so there's some serious tax savings when you become an S corporation. Now, there are some expenses tied to an S corp. You have to file a separate business tax return. It's called an 1120S. And so you're going to pay someone to file that business tax return. You also have to run payroll. Payroll is the way that you let the IRS know that, hey, this is my wage and this is my owner's draw. And the way you do that is through payroll. And so there's going to be an expense with that as well. And so I'd say for most business owners, if you're profiting, like your net profit is more than $30,000, I would suggest looking into going into an S corporation.
Okay. I didn't know that bottom line 30,000 number. So that's interesting. So I know personally have a lot of friends who are self-employed, and I hope they're watching or listening, because if you are netting more than 30,000, now might be the time to reach out to Matt and talk about tax protections as far as maybe setting up as an S corp. Yeah,
absolutely.
Good stuff. Well, again, Matt, hit it out of the park. Just
thanks.
Great information for folks to think about, especially if they're kind of on that border of trying to figure out what's best for them and how to reduce their tax liability. So for those folks, how do they get a hold of you? How do they find you?
Yeah, they can give me a call. My number is 385-352-3396. Or they can hop online. My website is my-taxpro.com. And I'd be happy to help.
Okay. All right. Well, guys, if you have questions, reach out to Matt. He's who I recommend. Thanks so much for joining, and we will chat with you next time.